One of the concepts that I've had a tough time conveying is the cost or price of being invested in the stock market. It's easy to look back at historical stock market returns of 10% and just accept it and move on. It's especially easy right now because of how well stocks have performed in recent years. You've heard it a million times. Just squirrel away your savings into a diversified portfolio of stocks and bonds, never look at it, and voila, over the long term, it'll return 6 to 10% annually. Life's good, easy peasy. I wish it were that simple. The reality is that there is a price to pay for those kinds of long term portfolio returns. And I've always known it, but I've struggled to articulate it. But I recently read this book recommended by a friend, and in it, the author clearly and concisely puts into words what I've been bumbling through in meetings with clients and prospects over the years. The price of admission to get outsized returns is a dose of uncertainty, fear, doubt, and anxiety. It's a fee, not a fine. Let's break that down.
Uncertainty.
When you invest in the stock market, you never know what the next year will bring for your portfolio, or for that matter, the next month, week, day. Here's an example. In early 2020, who could have predicted one of the fastest market crashes in history driven by COVID, to be followed, mind you, by one of the quickest recoveries? The market rewards investors because the future is unknowable. If it were predictable, everyone would invest and stay invested, and the returns would vanish. It would look a lot like investing in the short term government bond market.
Fear.
Fear often strikes when markets fall sharply and headlines turn ugly. Example: during the 2008 financial crisis, we watched major banks collapse and stock market indexes fall more than 40%. Many panicked and sold near the bottom. Those who stayed invested eventually recovered and then were rewarded with a more than doubling of their portfolio over the subsequent decade. The lesson here is that fear makes us want to do something, when oftentimes the best course of action is to do nothing. So, enduring that fear, as hard as it is part of paying the fee for long term portfolio growth.
Doubt.
Doubt can creep in when your investments don't seem to be working or when someone else appears to be doing a lot better. Example here: imagine you hold a diversified portfolio while a friend brags about getting rich trading small cap tech stocks and or cryptocurrencies. You might start to wonder if your approach is too conservative. The lesson here is that every investment strategy will underperform at times. The key is trusting the process you built when emotions weren't running high. Doubt is natural, but if it causes you to chase the latest winners, then that's where you can get into trouble.
Anxiety.
Anxiety is what investors feel between market crashes. It's that restless unease that something bad could happen at any moment. Example: even in strong markets, people worry, what if there's a recession? What if interest rates rise? What if I retire right before a stock market crash? The lesson here is that there is always something to worry about. Learning to live with that low hum of anxiety without letting it dictate your actions is a core part of successful investing. Putting it all together now: uncertainty, fear, doubt, anxiety, these are all emotional tolls on the road to long term portfolio growth. It's a fee, not a fine. So paying it is simply the cost of admission for the rewards that come with being an investor. So, why am I bringing this up now? Shouldn't this be a message that I share when the stock market is undergoing a painful correction and clients are getting very nervous? Well, I'll do it then too. I just believe it's a message that we can't hear enough, frankly. There's no way to entirely eliminate the sting of seeing your portfolio decline sharply 20, 30, 40%. But the more you are prepared for it, almost to the point of expecting it, then the more likely it is that you will stay the course while others are jumping ship. That is all for now. Thank you for watching. See you next month.